Welcome back. Let's talk about the markets, the fundamentals, where we are headed. Jigar Mistry of Buoyant Capital now joins us on the show now. Jigar, morning. What's the implication of what's happening globally? We had a QE announcement from BOE, but the hawkish rhetoric from the Fed continues. The Indian markets have started falling in tandem with the global markets. What's the setup and the implication for India now?
Good morning, Rima. Thank you for inviting me to your show. I think, it has been an eventful week. So far we were all prepared after Chair Powell's speech regarding, the fact that, demand need to be crushed essentially because you want to bring inflation at 2%. Before the Jackson Hole, there was still a theory that, they might be happy to live with a 4% inflation and they're front loading the interest rate only to cut it later. But that alternative was very, very swiftly removed first in Jackson Hole, and then the speech that followed after during the committee meeting was very, very clear. I think the confusion arose because of what BOE did. And, it's very interesting. So let me just, since you asked the question very simply, the UK offers sort of part of that was the defined benefit plan. And what they have done was that, let's say if I'm working today and I have put up 100 rupees as, something that has been accumulated so far. And when I retire, they need to pay me a certain number, right? Now that number is fixed. And between now until the time I retire, I'll contribute some more to it. Let's say that's 50 bucks. Now, for that 50 bucks, the sort of pension managers had entered into a swap. They are basically sort of paying a floating rate and essentially taking a fixed rate so that they can pay me once I retire at a certain number. What the 100 rupees I've already given is essentially locked in form of bonds, which are held to maturity. So the price of the bond doesn't really matter for now, except that while giving the collateral for the swap, I have actually put the bonds as margins. Now, if the bonds fall 70%, ideally as a pension manager, I shouldn't really care, except the banks requires more collateral. And therefore, the pension manager had to go and sell the bonds again. So it was sort of a complete sort of mismatch of, market timing, which the BOE tried and come to address. Market sort of misconstrued that as a change in stance, and therefore Fed will pivot again. I think that is all totally not true. Fed has been very clear. And, ideally, a lot of people say that, look, in India, how does it matter? But India, the RBI raised 50 basis points today at a time when in the Indian economy is not hitting, which is essentially to sort of prevent the 90-odd billion in forex we have lost and the 82 on the rupee that we likely see very soon. So I think it's all connected, and therefore we believe that if the Fed action is going to continue, the dot plot has moved up not just for 24 but even 25. Then I don't think there is a chance for us to get very, very excited very, very soon. There will be this rallies that might come through, but I think the longer picture continues to be wait and watch. And while we are there, one last important point I want to make was that if you're seeing the crude price fall and the commodity price gets crushed, why isn't the inflation falling? And I think the way we read this is that it's predominantly driven by services. So if you look at the sort of employment, that continues to come off. And that's in part because, the previous administration prevented immigrations, and post-COVID, a lot of people don't want to work as hard probably. And the only way to sort of bring that down is to reduce the economic activity. So if Fed isn't going to ease up very soon, then, India will have to follow suit, which will, put the economy, which is otherwise reasonably robust, into some bit of pressure. So I think we continue to remain cautious. The last month I was there on your show. That stance hasn't changed, although some stock prices have corrected, which make us a little more interested now.
Okay. Hi, Jigar. Morning. Thanks for putting the global picture in perspective. So your caution is taken on board. But despite that caution, I'm sure you're looking to buy. You said you're, feeling enthusiastic given the current valuation. So what is it that's looking appealing to you right now?
Yeah, good morning, Sumera. So a lot of domestic-facing sectors are very interesting, right? And banking, microfinance, insurance are some of the most overweights that we have had for quite a while now. banking as a sector is interesting because rising interest rates actually result, if you take through the entire cycle, in rising NIMs. And although, the investment book does see some losses, but essentially, investment book doesn't get a PE, whereas your NIMs do get a PE. And therefore, the value of the business of a bank increases. And therefore, that's something we are interested in, continue to be interested in. Microfinance is another sector which, is likely to see a very positive cycle after, I think, the whole issues over the last year or so. Insurance, again, domestic facing, we have been on the show before to sort of suggest that. And hotels as well, right? So hotels, cement, those are all inward facing sectors, and those are the businesses we continue to like. IT, despite the recent correction, I think we have not had IT for a very, very long period of time. We missed the rally on the way up. But because we always thought that India doesn't have a tech stock, we have IT services. And whereas something like a Zoom can grow revenues 5x in a year, the smallest of the IT services company will have a hard time increasing, revenues by 5 percentage point more than what they have guided for. So I think they're two very different businesses, and they shouldn't have gone up with NASDAQ, which as a corollary should not be coming down with NASDAQ, but such is the case. So, you're not likely to see margins expansions or volume growth higher than what they have guided, in which case, you have to stick with the domestic facing industries.
Thank you very much, Jigar. We're out of time. Thank you very much for joining in.